Welcome! You're viewing the video version of the Pirls Stock Market Commentary for November 15, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio at 0.59 fell from 0.88 last week, dropping further into bearish territory. The total count of securities in bullish or bearish patterns fell 3% to 2,858. The count of bearish stocks increased 15%, while the count of stocks in bullish patterns decreased 22%. The Pirls PNF Market Breadth Summary Chart shows us a market now 24 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the resulting prompts. To receive the stock market commentary via email, simply enter your email address in the provided space. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 88 points for the third decline in 11 weeks. At a negative 5.11 points, it continues below all 7 tops above plus 100 and continues above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on higher average daily volume. Momentum. At minus 81.62, the CCI 20 daily has decreased from 86.34 last week, has 2 consecutive days below zero, and continues outside the plus or minus 50 range, prohibiting a valid zero-line reject long entry signal at this time. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 8 weeks ago, while the daily CCI 20 began a Woody's uptrend 4 weeks ago. The CCI 20 weekly in a Woody's downtrend, but with 3 consecutive weeks above zero, has dropped to plus 32.35 from plus 86.34 last week. With the CCI 20 inside the plus or minus 50 range, it has formed a valid zero-line reject short entry signal for Monday, 11/16 open. We will follow the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top and bottom industries are negative. Bullish, brokers, and KBW Bank continue in the top 5. Gold and silver continues in the bottom 5. REITs has left the bottom 5. Oil and oil services have left the top 5. Bearish, disk drives has entered the bottom 5. Computer hardware has left the top 5 and entered the bottom 5. Focus this week from www.theburningplatform.com, posted with additional charts at zerohedge.com. How many more recession confirmations do you need? Some key points and graphs are as follows. All economic data confirms an economic recession. Corporate profits are falling, and their forecasts for next quarter are worse. Global trade is slowing dramatically. Oil prices and other commodities are plummeting to multi-year lows. Manufacturing and services surveys are flashing red. Layoff announcements by major corporations are up 40% over last year. A global deflationary recession is underway. Only a CNBC bimbo, shill, or Ivy League educated economist isn't bright enough to see it. Retail sales came out Friday morning and they were worse than dreadful. They confirmed the horrific quarterly reports from Macy's, Nordstrom's, and Kohl's. When you back out the subprime auto loan spurred auto sales, long-term rentals, retail sales grew only 0.5% over last year. That is far less than true inflation, so on a real basis, retail sales are falling like a rock. This only happens during recessions. The storyline of the economic bulls was how plunging oil prices was going to boost the spending of consumers across the board. That storyline is as dead as an Obamacare patient. It seems all the gasoline savings immediately went to pay for the soaring cost of Obamacare. The people buying those cars, sofas, and washing machines don't have the money, and when the bill comes due, the losses will be epic. Restaurants and bars, growth is still decent. I believe this is the area that will be the last to crash. Dr. Bernanke and Dr. Yellen injected a massive dose of adrenaline into a patient with cancer. The patient showed the appearance of recovery, but the cancer has metastasized and spread through the entire system. Competent doctors would have cut the cancer out by allowing bankrupt banks to liquidate and purging the system of cancerous debt. Instead, they took steps to promote the proliferation and spread of the cancerous debt. Now, the patient is terminal. On that light note, thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have been enjoying a peaceful and pleasant weekend, that you're looking forward to a productive and prosperous week coming up, and wishing you true success.